On to the queries that you have for us on the show today. You can either call us or WhatsApp us on the numbers that are flashing on your screen up there. And to answer all those queries, we're joined by Akshay P. Bhagwat, who's a Senior VP at JM Financial, and Avinash Gorakshakar of Avinash Mentor Research Services joining us now. Welcome to both of you, gentlemen. I'll take up the first question, which is coming in from Suresh, who's writing us from Pune, asking about undervalued small cap stocks that he can go ahead and invest into. He's got about 2 lakh rupees right now, and he says that whether he should go ahead with battery storage theme, NBFC or healthcare sector, or maybe probably divide his money into these or one of these sectors. Avinash, I'll come to you on this one. A very good afternoon to you. What would your view be?
Yeah, good afternoon, Mahima. I think, undervalued is, it has to be looked from a relative sense, because with the markets firing on all cylinders, now it's very difficult to actually say what's really undervalued, because only over a period of few days, I think the market will cool off and we'll see prices stabilizing. But I think within the hotel sector, if he's looking at investing his money for the next 12 to 15 months, I think Lemon Tree, Chalet Hotels, even Indian hotels look to be quite interesting. And within the auto pack, we like auto component players like Sundaram Fasteners, typically a Lumax Industries. And most importantly, I think the defense sector, I think, which has been in the limelight. I think even at these levels, stocks like Bharat Electronics definitely could be a better bet, I think, if you're looking to stay invested for the longer term. But I think exporters, you mentioned about the textile sector. I think Gokuldas exports, companies like Arvind, Indocount, these are all companies which are going to benefit significantly, because a large percentage of their revenue comes from the US markets. And I think with now the trade policy finalized, I think the markets are cheering that the threat of, the import duties on the export goods was very high earlier. Now it's come down. So I think business will be back to usual, but definitely some improvement would be seen in the fourth quarter. So I think, these are all basically themes and stocks which I think the investors can definitely add on declines. In this market, most of these stocks have gone up. So we'll prefer that there's a mild correction, the market stabilize in the next few days. At that point, buying could be advisable.
Got it. Got your view, Avinash, and welcome to the show. We have a first caller also for today coming in from Andhra Pradesh, and Man Singh has a question for us. Man, good afternoon. Welcome to Ask Profit. What's your query?
Very good afternoon, sir. Sir, I am invested in Transrail Lighting, 150 shares around 620 rupees.
Okay.
Should I accumulate more number of shares at the current price?
To enter this with a long-term investment horizon or a short-term investment horizon?
Yes, sir. I can stay 3 years, sir, up to 3 years.
Got it. Avinash, let me come to you then very quickly on Transrail Lighting. It's actually been a very interesting counter, because the results have been quite strong over the last 3 quarters, but it's been in a corrective phase. Should Man continue to hold this for the next 3 years? He's holding 150 shares at 600 rupees per share.
No, I think, Puneet, he can continue to hold. The company has a very strong order book. Even the numbers, as you mentioned rightly, Q3 numbers have also been quite solid. I think overall, the performance in terms of data points looks very interesting. But I think the reason the stock got hammered down was due to some corporate governance issues, which I think the management has clarified. So, I think the markets were not very happy that this clarification came after the disclosure was made by some analysts. But then I think, business is growing very rapidly. I think the markets will respect the data over a period of time. So I think if you can hold on for the next 12 to 18 months, it's a growing business. And I think the order book actually clearly shows that, they've got a lot of repeat business from their existing clients. So I think, if he can hold on for the next 12 to 18 months, he can definitely even add more, and definitely a good risk reward is possible. But the time frame has to be longer.
And, we also had the chance to speak to the management today at 1 o'clock, where I actually had a chance to speak to them on what's the outlook. It seems very positive. A lot of capex that's coming on stream in Q1 of FY27. So if you missed it, do catch that conversation on our YouTube channel. But another caller coming in from Australia, Shailesh, is now joining for a stock query. Shailesh, good afternoon. Welcome to Ask Profit. What's your query?
Yeah, thank you very much for accommodating my query. I want to mention one fact. I have been, going through your channel and the information that you guys are providing on your channel.
Right.
I'm consuming all the day. It's actually daily my to and fro office commute. So thank you very much for all the information that you guys provide through your channel. My query is regarding the Ramakrishna.
Sorry, I think, Shailesh, we lost your connection, but, thanks so much for actually joining in on a daily basis and actually calling us. We love hearing from our viewers. It's also very evening in Australia, so I hope you have a good evening. But let me take the stock query actually with Avinash again, because Avinash, on RK Forgings, there was that corporate governance issue yet again in terms of inventory management, and then the stock price got a hammering in Q4 of FY25. So since then, it hasn't actually recovered while there has been a multiple disclosures that have come in. Do you think that Shailesh should continue to hold this counter?
Well, I think, see, from a longer term perspective, Ramkrishna Forging is a very large forging player. It's second to Bharat Forge. And I think, they have gradually diversified into the railway segment. In fact, they have tied up with Titagar for manufacturing of wheels for the railways. And I think this unit is also going to start operations in the year FY27. So typically, I would say that, yes, I think the third quarter numbers were not very encouraging. There was some inventory issue, which the market could not digest initially. But I think as things stand, I would say that at these levels, most of the negatives are priced in. And most importantly, hopefully with the auto sector now doing well, Class 8 trucks also doing well, because this company also has a large exposure in the US, truck market. So typically, I think, again, holding on for the next 12 to 15 months makes it more advisable. There's no need to get panicked because this is a large company. And I think over a period of time, all these negatives would get completely neutralized. But I think you need to give in 12 to 15 months and continue to hold.
Because of you, Avinash, the next query is on Blue Jet Healthcare. And Usha is writing into us for this query. She's holding shares at 783, so currently sitting on a loss, asking if there could be any prospects from the India-US trade deal that could boost the company's fundamental performance. Avinash, on Blue Jet, it's been a counter that's hurt a lot of investors. Should Usha continue to hold? Would you recommend averaging down also, since it's corrected quite a bit from a buying price?
Yeah, I think, the company has a very robust business model, a very strong management team. And I think, the area in which they operate, a CDMO space, I think is growing quite rapidly. And I think with the US-India trade deal out now, clearly, favoring India and obviously, export players, it would definitely benefit, Blue Jet. The company has a very strong kind of a business model. And I don't think any further downside at least is expected. But overall, I think, if the investor can stay invested for the next 12, 18 months, then I think it's a good stock to accumulate. I think the company should do significantly better in FY27. So I think despite the fact that the investor has purchased at a higher level, I would suggest that he should average at the current level and take the benefit of the current price and stay invested for the next 12 to 18 months. That better prospects are going to be forward for the next financial year.
Okay, all right. So that's the view coming in on Blue Jet Healthcare. But viewers, it's time for our rapid fire round.
DC for the next 3 years. Avinash, would you recommend buying right now?
Yeah, I think you can start nibbling in the counter at the current rate.
Okay, the next one is on SPI. Gautam from USA wants to know if it makes sense to make an entry right now from a long-term perspective. And Avinash, your view?
Yeah, I think you should definitely add, slowly, but definitely it should be an addition in the portfolio.
Okay, Exide Industries is the next one. Venkatesh is holding at an average price of 400. Can he average more from long-term perspective? Avinash, your view?
Yeah, I think he should hold on. I think looking at the buoyancy in the automotive sector, I think this definitely should move up. In fact, we can even average at current levels.
The company also held its conference call today. Some weak commentary on telecom, but expecting better performance in the domestic business. The next one, CG Power, bought at 715 by Mahalakshmi. Avinash, what should she do?
I think continue to hold on. Here, the bigger trigger will be the semiconductor business. That is going to be the focus area going forward.
Okay, the next one is on Suzlon or ITC or Geo Finance. Which one should I buy from a 2-year perspective for better returns? Avinash, your view?
I think ITC has been beaten down very badly. I think most of the negatives are in the price, and I think it's a business which is going to grow despite restrictions. So ITC could be, possibly be bought at the current time.